All right. Hi, everyone. Welcome to another episode of Joe Knows. I have our guest with us today is Eric Tomei, and we're going to ask him a few questions on some random things because he said to throw whatever at him and he'll try to answer it. So thank you for joining us, Eric.
Joe, thanks so much for having me on. It's a pleasure.
Yeah. And where would you like to start? Where are you at right now?
Where am I at right now? I am currently at my W 2 job at my clinic, to be honest with you. But besides being a physical therapist, which is my day job, I'm also a full time real estate investor. Um, I have multiple multifamily units, and I have single family units that I use as long term rentals, and I also have short term rentals that I use as Airbnbs.
Nice. So how long have you been a physical therapist for?
Oh my gosh, I've been a physical therapist for 22 years now. It'll be 22 years in April, and I will have been a real estate investor for 15 years.
Nice. Oh, yeah, so you've been doing both of them for
Yep.
quite a long time. Yeah.
Oh yeah, like we talked about before, it's like two full-time things.
Yeah, yeah, yeah. Yes. Oh, yeah, 100%. So, okay, let's start with the real estate side. Let's go with, like, people that are, to they asking, "Why did the chicken cross the road?"
I'm
So why
just
did the chicken
this
cross
is
the
so
road?
funny.
To get to the other side. It's not like
It's funny.
the property that, Eric owns. Um It as a real estate investor, where would you say, people should start out at, or how should they start? What
Yeah, it's a great question, Joe. I would advise people if they were asking me to really start in your own backyard. To be honest with you, because it's very very easy. You're close in proximity. You can get to properties easier. So I would recommend starting in your own backyard. But you know what? If your market is not great, or there's not a lot of deals in your neighborhood, or in your 1 to 2 hour radius from where you live, that's okay. My best suggestion would be to mastermind with people who are in other areas that you're interested in, whether that be in Michigan, outside of Michigan. I know we're both in Michigan, but doesn't mean that every great real estate deal currently is in Michigan. So I have various out of state properties, and I'm thankful for my teammates in different states that can make these great real estate deals happen.
So when you say stay in your own backyard, I understand that you want to stay local, but where does somebody start? Like, what do they talk to a realtor? Do they identify certain properties or certain areas that they wanna be at? Like, where like
Yeah, if you are starting,
Yes.
like, really starting, like,
Yes.
beginning, right? The
Yeah.
most important thing that you need to do is, 1, self-educate yourself. That can be with, connecting with realtors or other investors, and I would suggest connecting with other investors because they can give you a real, time view on what the market looks like right now. Um, 2, I would make sure that you set goals for what you want to accomplish in real estate before you even think about doing anything in real estate. You do not have to have all the pieces set up to close your first deal. Many times, and I know I can speak for myself, many times we didn't have some of the components of a real estate deal all tied up, whether that be the funds, whether that be the um, particular crew to rehab a property, or whether we were caught at the closing table and we were still negotiating. Those things all happen in real estate. But honestly, where I would start is self education, and then talking to real estate investors in your local area. And you can do that a variety of ways. You can always connect online through Facebook, but I will tell you, going to local real estate meetups is a great way to connect with the local market. They will tell you exactly what's going on with real estate investments in particular. Realtors are great sources for a lot of things, but if you're going to explore the realtor route, just make sure that they have a focus in investment properties as well as retail.
Okay. And then, um, after you get started, let's say you bought
Mhm.
your first property. Oh, well, let's see what this question is. How do you select a property management company, and what tricky lingo should I look out for?
Great question, Brian. So let me tell you. So I've dealt with property management companies on various forums. I mean, I've dealt with small property management companies. I've dealt with large property management companies. The best advice I can give you is obviously get everything in writing, read your property management contracts beforehand, and understand what they say. If you do not understand what they say, which most people don't, that is appropriate to consult with a real estate attorney to make sure you understand exactly what you're getting in with this property management company, and be prepared. And I mean this, and I'm not saying this in a good or bad way. Be prepared to manage the property management company.
Okay.
It is going to happen. If you think you can just let the property management company run your properties with little to no involvement, that is a colossal mistake. You are in control of your properties always. And that is why some people, not all, some people are actually going into self management. They will form their own quote unquote property management team because, again, of their experiences with various property management companies. This is not a rant about that all property management companies are bad. There are very good ones out there, but it's important to do your due diligence to make sure that you know that the property management company you are using is good for you and meets your needs, and they understand what you want to accomplish with this particular property.
Right. No, I definitely agree with that. It's hard to build that trust from their standpoint, right? So
It is.
obviously, if you've been working with them for long enough, you can ease off a little bit, but up front, you need to be on top of people to make sure that you can trust them. And that's where you came out with the real estate attorney thing. So
Yeah,
definitely an attorney. You
you
need an
you have
attorney.
to. I mean, it. You need the protection just in case things go wrong or the agreements go wrong or there's a disagreement. You need a real estate attorney to educate you on the fact of exactly what that property management contract, because they're all different. They all have some different words in them. You have to educate yourself before you get into any kind of arrangement with a property management company. I've seen horror stories with property management companies, and I've seen very good things happen with property management companies. So it really just kind of all depends on how that contract is worded, and please consult legal advice before you get into any relationship with a property management company. You just don't want to get burned in the end.
Right. No, I agree. And okay, for somebody that's starting out, is there a type of investment property that you would recommend starting out with versus, some of the ones that are more intricate that you would need more experience with? Or is it just a matter of a preference type of thing where they can get into any kind of section of investment property, but a smaller version of that, if that
Yeah,
makes
it's a
sense?
great question, Joe. I honestly, I started off in the single family space. I started flipping houses back in 2007 when the market was, you could get those houses for 50 cents on the dollar, and the market was in a deep recession from '07 to '09. So that's how I started off. I thought that that's what I wanted to do. I wanted to continue to single family flip, but sometimes systems are not sustainable. We ran into the issue of we would have contractors, but not necessarily the funds right away. We would have the funds but not the contractors because they were already working on houses. It was a very it's not that anybody can't do it, they can, but our situation was such that it was a little bit challenging to do that. So honestly, whatever you have a passion for, if you think that you want to buy apartments or you want to buy self-storage facilities or you want to go into commercial or you want to go into an Airbnb, go with that. Go with your gut and educate yourself as much as you possibly can and find mentors to help you who are willing to help you and share your knowledge. And that's where the power of a great mastermind group comes in. And I use that word mastermind. Mastermind is just simply a group of people who have already done something that you've already done, that you want to do, that they've already done. And they're
Right.
there to guide you and provide you with that education and experience that you lack in a certain area of real estate. So honestly, I don't think anything is right or wrong. I think it's very individual specific, and depending on what their goals are, to achieve in real estate. Some people want to replace their W 2 income and want cash flow. Some people want to flip. Some people want to stay in their W 2 and just have passive investments. There's multiple ways to, to pursue a career in real estate. So one size fits all does not necessarily apply here. It's really whatever you feel in your heart that you want to do.
Right. And I think that the number one thing that you said, which is based on what my podcast is based on, is the mastermind experience thing, right? You can't put a number on the experience because honestly, how long does it take for you to get efficient at what you're doing and for
Right.
people to jump and skip those X amount of years to get caught up is invaluable. You're not making the same mistakes. I mean, for me, with my businesses, I had to learn a lot of stuff on my own. I had to um, figure out marketing on my own. I had to figure out systems on my own. Versus right now, if somebody comes to me, I can get them started almost where I'm at right now. So,
Yep.
like very quickly. So
Yes.
I definitely appreciate that um, because I know how invaluable it is.
Yeah, it really is. And I mean, honestly, we all need help at various stages of our lives with everything. There's no like shame in asking for help. I mean, I feel like I learn something new every single day. And I'm just thankful that I'm around people that can give me that knowledge and that education so that I can go apply it. To my real estate deals. So I'm very, very grateful in that sense. So I know some people are kind of they're not exactly the type of people to ask for help. In real estate, you got to get over it. Ask for help, because
Oh
if you don't
yes.
ask for help, it could cost you money in a deal.
Right. Yeah, and that's the thing. Like just like you said, asking for help from the people that do it all the time, getting attorneys and other people that are surrounding that deal to verify and make sure that you are doing the right thing that you should be doing and not getting caught in a situation where you might be screwed in a year because you can't get back out of a deal
Definitely.
without paying a penalty or something like that. So,
Right.
um, no, it's definitely good to have that s the network that you need surrounding you.
And you know what? You touched on network, Joe, and that's a really good point. I mean, everybody's heard the phrase "your network is your net worth," and I really do truly believe that. I feel like if you have a great and strong network, it can catapult you to heights that you probably didn't even imagine for yourself, because they will open your mind up to new ways of doing things and possibly quicker ways of doing things to get you to your goals faster.
Right, yeah, it's like I said, you're gonna get caught up and you're gonna skip the fumbling around years because,
Yep.
your first
Yes.
flip did not go the same way as your last flip, it for
Correct.
sure. So,
Correct. I mean, on my first flip, Joe, and I remember telling you this a little bit ago. I mean, I lost $5,000 on my first flip.
yep,
You know, it was not a fun experience, but you learn. You don't make the same mistake twice, and you get
right,
better at it.
yeah. Yeah, same thing for me at my job. My first case took me 3 weeks. Now
Yeah.
I can do one in a few hours. So,
Exactly. Right.
it's, and that's my 11 years of experience doing that. So, um, no,
And
it's
real estate
definitely
is no
been
different. I mean, you're just applying it to a different medium, just
yes.
like you said. Whether it's the law or real
Yep,
estate, it's all systems and tweaking those systems to make sure that it works for you.
exactly. So, you mentioned a few different, types of investments that you're in,
Mhm.
um, different locations. I always preach diversification to people. I don't know what your thoughts are on that or, you know, why you're in all these different types, if it's just you wanna venture off and see how it is, but why don't you speak on that?
Yeah, so I made the decision probably about 3 or 4 years ago to transition from single family to multifamily. So that multifamily is really my bread and butter and what I'm focused on right now. And I do have a limited partner position in a 108 unit deal in Kansas City, Missouri. I do own a 5 unit apartment building here in Ypsilanti with a partner. I have a company that has 12 units, and we're closing on a 12 unit later this month, early April. That's a combination of short term rentals, Airbnbs, and long term rentals. Um, So, and I am working on 3 flips because sometimes you just can't take the flipper out of the investor. I'll tell you what. So, I honestly think it's very, very good to diversify your real estate assets truly, because you might not find a deal. You might not have the liquid capital. You might not be capital raising for a deal right now. So, it's really important, I think, to make sure that you have multiple streams of income, I think, in real estate. Having said that, you really don't want to keep chasing like the shiny object either, right? You want to focus on what you're doing and what you're doing well. So when I say that multifamily is my bread and butter, it is. That is definitely what I'm focused on every day. I'm looking at multiple deals per week. However, if an opportunity strikes and I feel like it's a good opportunity to take, I'll certainly act on that as well. Because you can't necessarily turn down opportunity, especially if it fits within your overall real estate investing strategy.
Right. Yeah, that sounds kind of like this a similar mentality that I have where, I want to be like 80% doing the stuff that I know that I can control, that I feel comfortable with, that makes, the bread and butter type
Yeah.
of thing. And then if I have an opportunity here and there, I'm going to take it. And it has to be a calculated, lower risk than normal for me because
Hmm.
I can't at
Correct.
this stage of my life be like, oh well, I'm gonna sell all of the stuff that I know that's working for me and go
Right.
off and try this new thing because it might make more money than what I'm making right now.
Right. Now you spoke to diversification, Joe. That
Yeah.
was the beginning of the question. And actually my wife, she's a financial advisor. So
Yep.
you want to talk about diversifying in different ways like that. So we have some interesting debates on, not necessarily what's better or worse, but it's a different way, in my opinion, to get to the same goal. And I
Right.
think that that's also important too, that your significant other, your spouse, is on board with it. I wouldn't say honestly my wife is on board with all my real estate deals, but I think she clearly supports me in what I'm trying to do because obviously we're trying to achieve some things with investments,
Right.
whether it be real estate related or non-real estate related.
Yeah, and that's a thing too, especially if you are married, that both spouses need to be on the same page in terms of at least
Yes.
being open to understanding what the other person wants to do,
Right.
have the same goals, different methods of getting to those goals, that's fine, but,
Correct.
yeah, it's
It's
and
a
that can be
long,
challenging.
long conversation if that's not the case.
Yes. I mean, well, that's another thing too is, like, I mean, you're not spending $100 on real estate, right? It's like a
Right.
big purchase. It's a big investment.
Sure.
You're not saying, "I'm gonna go buy, this $1,000 widget." That's
Hmm.
uh, the legal product that they tell us in law school. It's a widget, right? So
Okay.
this $1,000 widget that's gonna make us money,
Yeah. Right.
you're saying, "I'm gonna buy a $200,000 property or a $200,000,000 property with some other investors."
Right.
That's a huge undertaking.
Yeah, it is, and you know, you better know what you're doing. Having said that, though, let me just say this: you could look at all the numbers and analyze the deal from now until eternity, and sometimes things change in a deal that are out of your control. The market changes. Um, you know, your partners change for whatever reason. So honestly, you just do the best that you humanly can. Look at the risks and the rewards and see if you can tolerate the worst case scenario if a real estate investment does not work.
Oh, yeah. So we have another question.
Sure.
Alright. There's currently an opportunity to build new homes in an area where manufacturing is growing. How would you determine whether to build site condos, apartments, or manufactured homes?
Yeah, first of all, that has to do, I'm assuming, with the zoning restrictions because apartments are considered commercial, whereas I believe the other two, I think, are residential. Don't quote me on that, but I believe the other two are residential. So it all depends on your strategy and what you really want to do. It also depends on the market of what it demands. I mean, does it demand tiny homes? Does it demand, are there not a lot of apartment buildings there? Is there a room for another single family subdivision to go up? So that really the market kind of determines also what you would be more inclined to build versus not. I think those are my two kind of takeaways: is market demand and what do you want to build? Is it cost effective to build what you want to build also? Because sometimes you lay out all the numbers and you're like, no, this is just not going to make any profit. So I'm not even going to start this because it's not going to be worth it. So sometimes there's a pivot in strategy, which is certainly not bad. There's a pivot in strategy to determine how you can maximize the cash in the space that you're given.
Okay. No, that makes sense. Do you have like methods or strategies of how to determine whether there's market demand or, you know,
Yeah. So, I mean, honestly, for apartment buildings, I mean, there's multiple sites that you can go on to determine if the population growth. Hey, what's by the piece of land? Is there like a Whole Foods next to it, or is there a gun shop? Not that I have anything against guns at all, but I'm just saying in terms of what you want surrounding your building and your piece of land, you want to make sure that there's good industries that are going to last a long time. Is my point.
I see.
Again, there are definitely resources online that you can go and research. If you can't find any resources online, a really good resource is calling the county that the land is in and asking them, hey, are there any liens on the land? Hey, um, is there any development that was planned on before, you know? But having said that, though, if you're buying a piece of land, right, you're going to do your due diligence on buying the piece of land before. So you really should find all this out before you even purchase the land. Because if your goal is to build apartment buildings, but one, it's not zone commercial, or two, there's three apartment buildings on this, and I'm exaggerating, there's three apartment buildings within a mile of where you want to buy. Maybe that's not the best strategy to go on. But again, you're going to find that in your due diligence when you purchase the land. How do you find out your due diligence? That's what title companies are for.
Yeah, see. And that's all good insight because people literally do not know where to start with any of this stuff.
Right.
And
Right.
so
So county websites are very, very good resources when you are trying to find out demographic info, population growth, job growth, um, a median income, all that. County websites are very, very good for that information.
awesome.
Mhm.
Um, is there anything else that you would like to add about your real estate experience? Or I know that you, Zaid, and Andy are putting these meetings on together. I'm not sure if you want to add anything to that.
Yeah, so I have two partners, Zay Kassab and Andy Hubbs, and we are Top Point Investments, and we actually host every Tuesdays. It's called Tuesdays with Top Point Investments. We host very small groups, just educating people about multifamily real estate and some of our journeys and our experiences. Since combined, we own about over 500 units between the three of us. Um, so it's actually a lot of fun talking to people and just finding out their background, their stories. We usually have our meetings in Royal Oak. But again, we love talking to people about real estate because we're all very passionate about real estate. And we like to include people in our network in some of our real estate deals if they would like to be included. There's certainly absolutely no pressure or anything like that. We just like to educate and be around cool people. So that's actually a really fun part of this whole journey, is being on the journey with people you know, like, and trust. I will tell you though that if you're going to get started in real estate, it can sometimes be a bumpy ride. Like, it's not all roses and flip this house and everything you see on HGTV. It's not that at all. There's like 100 behind the scenes things that they're not showing you that are an absolute pain to deal with. But again, that's why you set goals, both short term and long term goals for each project, because you want to make sure that you're laser focused on achieving those goals when the days are long and hard. And sometimes they get long and hard. It's not always easy.
I think that's what people miss,
I think
especially
you're right,
nowadays,
Joe. Yeah.
especially nowadays with social media, right? Because you're before, if you were watching the news, like whatever, like 30 years ago, you're watching the news, You can turn the TV off. You're segregated from the outside world.
Right.
Now you're you're
You're not.
seeing you're seeing 1,000 posts a day,
Yes.
and 999 of them are good.
Yes.
And they're only showing the good, and people making it look easy because that's what they're showing you. It's
Correct.
very difficult to do anything. It's nothing comes easy, but people
No.
can make it look good if you have
Right.
experience. Just like we were saying, your first flip didn't go right, but this last flip that you just did probably went much better.
Right.
And showing that to somebody that has no experience, they get the wrong impression.
I would just say too, one thing would be if you're just starting, just trust but verify everything that you hear. People, I don't think necessarily put out, misinformation on purpose. Sometimes they do, trust me. But and Joe, you being in the law, I'm sure you've run across your fair share of
Oh yes.
cases that you've had to investigate, obviously, a little further. That's the only thing, just to protect you personally, is just trust but verify. Believe people when they tell you something. Just make sure you do your due diligence to verify what they're saying. That's all.
Right. No, definitely. I like that. Um, Definitely verify everything that you, and go to the right person to verify it. So
Correct.
yes.
You have to go to a source of information that can provide you an objective point of view.
Right.
Like, you don't want to hear like the best case scenario. You're like, just give me the facts, because
Yes.
facts is what makes you money in a real estate deal, not somebody's opinion.
Exactly. I agree. So,
Yeah.
well, thank you so much for joining us. And you shed a whole bunch of light on the real estate investment market. And appreciate that you were on here with us. Again, everybody, this is Eric Tomei talking about real estate investments. And if you need any estate planning, you can always contact me. You can go on my website, dalloestateplanning.com. You can email me at joe@dalloestateplanning.com, or you can call me at 248 914 8146. Joe knows, so you don't have to.